G'day folks, welcome back to another update for Bitcoin and Ripple. Now Bitcoin's still bullish, but just watch that hourly divergence on Bitcoin. Ripple is still consolidating. We're going to include some back testing. Before you go any further, make sure you hit that like and subscribe button to support the channel. Be greatly appreciated. Also, don't forget to reference the plus into our trading strategies. In terms of the outlook as of today, October 8th, Bitcoin is trading around at 121,391, experiencing a slight 2.3% decline over the past 24 hours, but maintaining a 9% increase for the week and a 30% rise year to date. This bullish trend is fueled by strong institutional interest, evidenced by a record $3.55 billion in ETF inflows during the week ending October 4. Geopolitical factors such as ongoing US government shutdown and weakening US dollar have further bolstered Bitcoin's appeal as a safe haven asset. Ripple's XRP, currently priced at 285, has seen a 4.4% drop in the last 24 hours, but remains up 35% year to date. The recent resolution of Ripple's SEC lawsuit has provided regulatory clarity, fostering increased institutional interest. Additionally, the potential approval of an XRP ETF could serve as a significant catalyst for further price appreciation. Both cryptocurrencies are poised for potential gains, with Bitcoin benefiting from macroeconomic uncertainties and XRP positioned for growth contingent on ETF developments. So looking at Bitcoin first, on the weekly, you'll notice here the price is well above the moving averages, giving us a bullish momentum on the price, but do notice the CCI is dropping off. We've got lower highs on the CCI versus the same period, higher highs on the price. Now that's a bearish divergence, so at some point we're going to see a pullback, and at the very minimum we take back a Fibonacci retrace from that high, assuming it pulls back from there. It could go higher, of course. The minimum retrace we can expect is at 23-38% range, that level there as a minimum. It could go a lot further to the downside, we don't know. That's assuming it falls from where it is. It could go higher, in which case we have to reposition the Fibonacci's. That's the weekly, cautiously bullish, but just be aware of that bearish divergence. On the daily, similarly, that's actually strictly not a divergence. It's probably about double top almost considered, but I'm going to leave it, and that could also be a bit of a pullback there. Yeah, I'm not going to draw that as a bearish divergence to be strictly with the rules. Sometimes if it's that close, I'd consider that a double top on the CCI, in which case that's slightly higher highs on the price, and we can expect a pullback at some point. But at the moment, it's bullish momentum on the daily, with both the price and the CCI above the moving averages, which means we can go long on the hourly, assuming the hourly's in long positions as well. Now on the hourly, you'll notice here we've got a declining highs on the CCI versus higher highs on the price, and that's already pulled back. And if we're to draw a Fibonacci on that one, take it back to the significant low there, you can see there it's already penetrated the 23-38% range. Now back here we had a bullish divergence, higher lows versus lower lows on the price, and that broke right up past the 100% retrace level on that one. So at the moment, if you're trading on the intraday time frame, on the hourly for example, you go long in the direction of the daily, but at the moment I wouldn't be going long until I started seeing these moving averages break to the upside on the hourly at least. Now if we look at the back test, I've taken a back test back to around about the 20th of April during that period to show you the effects. Now as I said, you'd be trading in the direction of the daily, so during that period you would have closed out your first position on that little break into the moving average on the CCI, which would have been near that point there on the price chart. Now you'll notice here as well on the hourly, that's the very latest you close out your stop loss on that point. On the hourly, we do average down, and what we're looking at here is, again, just drawing the trend lines. You'll notice there we've got declining highs versus the same period higher highs. So as soon as that moving average starts bending down, that would have given you an early warning that there was a bearish divergence there. You had a couple little bearish moves there on the CCI, and that was your first warning, but keep following the hourly price moving averages until you start seeing them bend down. And I've deliberately zoomed out here for those new to the channel. I like zooming out so I can see those a lot more clearly. If you zoom in too closely, sometimes it's like looking at a bug on a windscreen. It's a bit hard to sort of tell where the downside starts Whereas zooming out to a fair degree, you can see there, and I've color coded the moving averages on the price, you would have got out with maybe holding a position at that point there, and you would have avoided that drawdown. The same applies for these other periods. Let me just zoom. You can see there's another drawdown there, and just looking at that, you would have got out there on the decline on the price. And notice there on the daily chart as well, it hit that moving average range, in this case coincidentally. And then so on. You basically again follow the bearish divergence through the same periods on the price. There's no divergence there, no divergence there. You can see there from that high down to that point there, you had a higher highs on the price, and you would have got out just before that, entered that next position there based on that CCI decline. So as I said, at the moment, you'd be taking note of this bearish divergence on the CCI, and you would have got out at the very latest somewhere in that range if you're going long during this period on the 1 hour time frame. Next, we look at Ripple. Now on the weekly, you can see it's been consolidating in that range for a number of weeks now. Again, notice this bearish divergence on the CCI versus the price, and that's actually pulled back and hit our 23-38% target range a few times, and still in that, pretty much in that range or close to that range. But at the moment, the price is above the moving averages, giving us a bullish momentum. The CCI is still dropping, so just cautionary advice here. Don't go too strongly bullish until you see both the CCI especially start turning up, in which case you'll see the price moving up as well. On the daily, I've drawn two arrows here. The first one is where you would have taken short positions, and from this one you would have taken a long position. I've got the back test for both of those. I'll show you in a second. But where we are at the moment, you'll notice the price is below the moving averages on the price as well as the CCI. Now on the hourly, no matter which way you're going, or long or short, we always trade in the direction of the higher time frame. And again, this is showing bearish momentum at the moment. And let's see if there's no divergence there. No divergence there. Okay, so let's go back to this area. Okay, so that's all seems clear. The last divergence that's been obvious was back in this period. That broke down, hit our target range. On the back test, so first off, looking at the shorts, going from around about the 8th of August, you would have taken short positions according to the daily when both the price and the CCI broke below the moving average, taking short positions and closing out short positions when the moving averages on both the price and the CCI started curving up. And you can see there at that point you would have got out holding maybe a position and maybe taken a small hit, but not as bad as taking the whole drawdown if you let it go, if you average down. And again, notice there on the daily, the CCI touched the moving average range, which means you would have got out at the very latest according to the daily, if not the hourly. Moving on, in terms of going short, you're given here a bullish divergence on the CCI versus the price, giving you a few warnings, a few hours of warning, until finally it broke up strongly, and you would have closed it at the very latest at that point there. Another couple of short positions there, closing it out, short positions, closing it out, and so on. There's another big drawdown there. Again, notice we had a bearish divergence. That broke down, you would have closed it. Now in this case, you probably would have started closing it out once you started seeing the positions pile up on the average down, and you want to get out as early as possible as soon as you start seeing a bearish divergence. So don't always wait for it to break to the downside is my advice. As soon as you start seeing a few average downs, the price keeps going, and until finally at that point it did recover, but they don't always do that. And finally, where we are at the moment, XRP is still in a downtrend. But again, back here you would have started going long, and in the back test for going long, that's at this point here on a daily, that would have also paid dividends, again paying attention to the divergence. So both ways work, but you've got to be really careful and close out whenever the trend goes against you on the daily, but especially on the hourly as well. So hit that like and subscribe button to support the channel. That'd be greatly appreciated. And if you enjoy the content, subscribe at least on the free trial to my Patreon page. Links in the description below. Thanks, and talk to you in our next video.